Hello. All right. So this is well, we're going to a new chapter actually. Today we'll be doing actually the basics of accounting instead. So previously we focused a lot on cost of sales and inventory, and now I think well, it's a good time to actually focus on the basics. So this session would mainly be about definitions and a bit of the accounting equation. And to be honest, definitions is difficult because every country's definition might be slightly different for the same thing. So this will be very, very exam specific. So I wouldn't actually be teaching it. Instead, I'll be trying to break it down using the answer that the the answer key that the examiner gave. Um, and as for accounting equation, it's kind of universal. So as long as you can classify it properly using your own accounting standards, we should be fine. So yeah, brief introduction to my channel. If you're new here, welcome, welcome. I hope you enjoy your stay here. What I do is just hold, accounting lessons for my student. Right now, just one. Uh, but yeah, if you have any questions while you're watching these videos back or during the stream, feel free to drop a message. Uh, the easiest and most direct way is, of course, through the live chat, right? I'll be reading those frequently. The next best way is either the anonymous form that I've set up. It'll be on Twitch and YouTube. Or you can go onto YouTube comments and just post a comment there. Uh, I read those I think daily, if possible, if I remember. I'm sorry if I actually missed it. But yeah, I'm still waiting for my student to connect. I mean, I think he might have gone to take a shower. Oh, he's here. Okay, wait, hold on. Let's just start the lesson proper. Yeah, let me unmute. Hello. Okay, wait.
Sorry, sorry if ruined your intro.
It's fine. It's all right. Okay. Have you done the questions or you?
Actually, I am kind of stuck. I am attempting the first question.
Ah, okay. I see. I see. All right, that's fine. Okay. So let me bring up the stuff here and let me stream it to you as well. Give me a second. Let's see. Let's see. Where is it? Oh, okay, there we go. Right. Okay. So I mean, the first question, I think it's best if you just look at the model answer instead, right?
Mm,
Yeah. So I mean, if you want, you can read it out. If not, we can skip it. It's up to you.
okay. I'll just read it out. When they ask for what is meant by an asset by definition, an asset is a resource owned by the company for use in daily operations of the business. And then part two, the
Mm-hmm.
difference between a current liability and a non-current liability. Uh, a current liability refers to an amount owed by a business, which
Mm-hmm.
should be paid within one financial year, whereas a non-current liability refers to an amount due, which can be paid in more than one financial year.
Mm. Okay. Uh. Yeah. I mean, okay. So for the first part, right, it is a very simplified version. But yes, if that is what the examiners want from you, then by all means do use their answer for it.
Mm,
Okay. The second one is not wrong, right? The 1 year mark is actually uh by custom. It's not there's no rule that actually states 1 year. But I mean it's so commonly used that we've just made it a rule. So let's just yeah. So it's 1 year.
unspoken.
Yeah.
Okay.
Mm. And then yeah, I mean hopefully I don't know if like writing it like this makes it easier to see. I mean like you can use it if you want, but if not, I think it's short enough to memorize.
Mm,
Yeah. And okay, so let's go into the meat of the question, which is the whatever this is, right? You say you're struggling with it?
Yeah. Because I don't know what prepaid expenses are and accrued expenses.
Ah, okay. All right. Sure. Let's just do this, right? Okay. So we read the question first, so know what the question wants from us, right? So they want us to calculate profit or loss for this year, right?
Mm-hmm.
Okay. So what is the accounting equation?
For profit of the year, it is gross profit minus other expenses.
Oh no, accounting equation, like just the most the basic one.
Asset equals liability plus equity.
Okay. Now that we know that, right, we can actually classify. So profit or loss for the year, what account? Like what does it? Where does it belong?
And equity,
Equity. Why?
because it is one, not a liability, and two, it is actually no, wait, profit of the year.
Hmm. Wait, hold on. Let
Fuck,
me do some adjustments. Give me a second.
no, profit of the year is under,
Okay, go on.
I think,
Yeah.
yeah,
So
under assets.
is
Because it's one is not, it's not a liability,
hmm,
which means it's not using money. Uh, and because it is uh the company is able to use it to bring in other use it to bring in more money. So if
mm-hmm,
asset,
is an asset.
I believe I could be wrong.
Okay. Let's go back to the definition, right?
Sure.
Profit or loss. What is the equation for it?
Profit for the year.
Hmm.
Uh, the gross profit minus other expenses.
Okay. So it's gross profit less other expenses, right? So uh, okay. What is gross profit then?
Sales revenue minus cost of sales slash repair cost.
Revenue minus cost of sales, right? Okay. Then let's work all the way from this framework, right? Revenue, is it an asset, liability, or equity?
Revenue is in equity because it is a process. It is a process.
Okay, yeah, you can remember it like that, but don't write it in the exam as that way, okay? It's used to describe an inflow of asset or outflow of liability. That is the proper definition. So it's used to describe. Yeah, it's a descriptive kind of account, but yes, okay. Then what about cost of sales? If you use the official definition.
Cost of sales, it is the cost of inventory of realized sales
Mm-hmm. Okay, okay. That you have sold or you have not sold, or both.
that I've sold.
Okay. All right. Then is it an equity, liability, or asset?
Equity liability. It is a cost of sales is a liability
A liability? Why is it a liability?
because wait no, it's under equity still because it describes an outflow of
Outflow of
yeah, outflow of money, sorry,
assets.
outflow of assets.
Okay, so both of these are equity, right? Okay, what
Mm.
about well, other expenses? Is it liability, equity, or asset?
Other expenses, liability,
Is it a
because they
liability?
are
Why?
uh wait no, they're all under equity. According to this logic, then they're all under equity.
Yep. And if they're all under equity and P and L is, you know, this formula, which is
Oh
only
man,
consisting of equity, would P&L be an equity, liability, or asset?
it'll be an equity.
Okay.
Oh,
So
now
that's how you can deduce.
now I see it much better. Cause like when I first said equity, I guessed that myself, and then was like, is it?
Right, right. Yeah, so it's okay, it's okay. You're learning. So hopefully this makes it easier to remember. Because I noticed you do have some trouble remembering what exactly is profit
Yeah.
or loss, which I don't blame you. It's difficult at the start. Okay. All right, then let's go down the list that they gave us. Okay.
Hmm.
Office equipment. What is it? Asset, liability, or equity?
Mm, equity. Money has been spent.
Office
It's
equipment is an
like,
equity.
is it? Oh no, it's by their definition, it is an asset
Okay.
because it's used by the company on a daily.
Okay.
It's used for the daily operations of the
Yep.
business.
Yeah, this is an asset. Correct. Okay. Inventory. What is it?
Inventory is an asset
Why?
because it is used to it's used by a company to sell to gain money.
Okay. Okay. Trade receivables.
Trade receivables is under equity.
Equity. Why?
Uh, it is money yet to come. It's describing an inflow of money.
Is it describing an inflow of money, or is it actually keeping tabs on how much money is not yet in?
Is it not? It's not coming in yet. So
Okay. What
it
happens when you sell items on credit?
you sell items on credit.
Hmm.
Uh, this one I'm not sure.
Okay. Uh. So on there are two entries that goes in. Okay. The first entry would be credit revenue. Why do you credit revenue here?
Revenue. Because it's not by cash.
Oh no. Regardless of cash or when you make a sale, your revenue will increase, regardless if you made it by sale or on credit. Like sorry, by cash or on credit.
Right.
Yeah.
So why
S
does revenue decrease?
Well, let's look at the sorry, let's look at the gross profit, or like the profit formula, right?
Right.
Where does revenue sit?
Uh, Sales revenue.
Hmm. So where is it?
Uh,
Is it under gross profit or other expenses?
Gross profit.
It's under gross profit, right? So, and what do you understand from the word revenue?
Uh, Money coming.
Okay, it's used to describe like the process, like it's used to describe money coming in, right?
Yeah.
Yeah. So okay, then in that case, what's the double entry if you sold on cash?
If so on cash,
Hmm. When cash
it
come in,
is
you debit or credit cash.
cash comes in, you debit cash.
Okay. Then the credit side will be revenue, right?
Um. Okay. Oh. Oh.
So that's what I
Okay.
mean by describing cash coming in. So when cash comes in, you debit cash, then you wonder what's on the right side, right? On the credit side. You just credit
Right.
revenue. It's just to say, yeah, money did come in and I'm recording it.
Okay.
Hmm. Okay, then let's shift the story a little bit. What happens if you sell on credit?
If it's on credit,
Hmm. Does the
credit is staying
credit
in the
entry
future.
change? Is it still credit revenue?
Uh, yeah, it's still credit revenue, but
Mm,
debit trade receivable.
mm.
Damn
So
it.
is
Okay,
trade receivable an asset, liability, or equity?
it is an asset.
Okay. Yeah, that's another way you can remember. You can group it up by, by the process. Okay. Trade receivables. Okay. Let's move down the list again. Trade payables. All right, this one should be trade payables, liability, equity, or an asset.
Trade payables are a
I
alternative
mean, you've
definition.
established trade receivables as asset, and trade payables is
Trade payables is also an asset, I believe. Is
is
it?
it an asset?
No,
Trade payables
liabilities.
is a liability.
Um,
Is
I,
which is it?
that is liability.
It's liability. Okay. Oh,
It is for a company to pay others.
yeah. So payables means you gotta pay in the future. Receivables means you gotta
Right.
receive in the future.
Right.
Hmm. So, uh, so it's gonna be a bit confusing. Hmm. I mean, so far, any questions?
Mm, not one that I would, not one that I could ask
Hmm.
with a clear intention.
Okay.
Just I can't put my finger on what I don't know yet.
Ah, okay, okay. Then maybe next time you gotta uh let's see. Maybe next time
Get
you
the question.
revisit the question, see if you can do it.
Yeah.
Yeah, okay. Right, then let's move on. Cash at bank.
Right. Cash at bank, this is credit.
Hmm.
So it means that he withdraw cash. So it's credit asset.
Credit asset. Okay, what does it mean when you have a credit
Credit,
balance in your cash?
you credit equity. Cash is under equity.
Is it? Cash is under okay, normally cash is asset, liability, or equity.
Equity.
Is it equity? Why do you say it's equity?
It is not used on the daily for business, and also because um, because it's not
Or you're using the examiner's definition, is it?
you
But you do realize that when you buy inventory, you're using cash, right?
know, okay,
Yeah. So,
so it's
uh,
an asset.
mm. Now what you can think of it is you're gonna use that cash, you're gonna invest, or you're gonna do something with it to earn more money, like more cash in the future.
Um,
Mm.
okay.
Okay. So then normally cash is debit or credit balance.
Normally, cash is debit balance.
Mm-hmm. Then what does this mean? 1358 CR.
It means that he withdrew cash, so he credited the
Oh no
asset.
no. Okay. For this table, right? It actually
Yeah,
represents at a point in time. So on 30th, meaning that it's
right,
on this date at a specific time. So it's not
right.
a transient kind of thing. It's just a static. So when you have a credit balance on your cash, what does that mean?
Spent.
Well, I mean, okay, let's think of when you have debit balance, right? Meaning uh you have cash in the bank, correct? So if you have $1 is $1 on the debit side,
Right.
right? Then what happens if it's on the credit side?
He's in debt.
Yeah, you're right. He's in debt. He's in debt to the
Oh,
bank. This is something called overdraft. meaning that
Oh,
temporarily the bank allows you to spend more than what you have.
okay.
Mm. So I mean, of course, with interest, right? So what
Right.
does this mean now? 1358 credit.
He owes the bank
Hmm. So this is
135K.
a asset, liability, or equity.
Is a liability.
Hmm. So we call this bank overdraft.
Okay.
So when you write it, right, this is actually quite a common exam trap. Cash at bank, uh, you if it's credit, if you see credit or like a negative in front of it, right, you gotta put it under liability and call it bank overdraft. Okay,
Mm.
this is important. This is very important. All right. Okay, let's move on. Prepaid expenses. Okay, this is a bit interesting, isn't it? So what do you think when you first read these two words?
Prepaid expenses.
Hmm. Okay, let's break it down. What does
Expenses.
expense mean to you?
Uh, expense means money spent to buy something.
Mm-hmm. Is it a descriptor word or is it? Oh, hi, not the sizzle. I hope you enjoy this lesson. Um,
Uh,
yeah.
okay. It is a
Hmm.
descriptor. Is it? No.
It
Hold on.
well, expense. Okay, what do you think when you say expense?
Money already spent.
It's used to describe in event, right, where you spend money,
Right.
right?
Uh-huh.
Mm. So what does prepaid mean to you?
Already paid.
Already paid. Okay, okay. Then if you combine the two, what does that mean?
Expenses that were already paid.
Okay, so do you pay? Okay, so say for example you have a let's bring some like Spotify subscription. How much does it cost nowadays? I don't remember.
I don't.
Let's just
That,
say
that,
$15. Okay. What if you pay Spotify $30?
right. It moves over to the next month.
So they will not charge you anymore, right? For at least 2 months.
Right.
Right. Oh yeah, that's it. Okay, thank you for confirming. $30. Okay. We'll use the example $15, 10 times 2, $30. Okay. Right, then how do I say this? Right, so they won't charge you, right? But that money, is it still yours technically? Have they used it?
No.
Right, because you haven't used their service yet, right? So technically the amount that you spent still belongs to you, even though you don't have it on you right now, right?
Uh-huh.
So, knowing this, does it seem more like an asset, liability, or equity? Prepaid expense.
More like an asset.
Yeah, you're correct. It's an asset.
Right.
This is what they call a current asset because it's most likely going to be used within the year,
Right.
right? Okay, so prepaid expenses here. Okay, let's go to accrued expense. Okay, I mean expense? We kind of established it, right? So, what does accrued mean to you?
I have no idea. Which is why I was stuck.
Ah, I see.
Not what
Okay,
that could mean.
hold on. The sizzle, asset and credit, the same thing. Is asset and credit the same thing? Um, not sure what you mean by credit. Uh, I mean, do you mind elaborating? While you do that, I'll continue with this. Right, accrued means um something that you accumulate over time. So the most common one would just be you have incurred like a full year's worth of electric bills. But
Right.
the electric bill you only pay once a year, right? You don't pay every month or every day,
Right.
correct? Right. If you understand.
Right.
Mm. Right. So So throughout the year, the amount just gets accumulated over time, right? Do you still owe them while even though they haven't give you the bill? You're using their
Yes,
service, right?
you still owe them.
Mm, mm,
Liability.
correct, correct. So accrued expense is a liability. Okay, but one important thing to note is you don't look at the account and assume what it is. You look at what it's for, and then you determine what it is. Unfortunately, this is an exam question, so you won't know. But in real life, uh, you gotta ask a bit of questions. You know, what was this paid for, or like, yeah, things like that. Or like,
Mm,
for example, you have a gym membership that you pay once a year, something like that. Uh,
right.
and how do I say this? You pay once a year, right? But every month you're technically accumulating the amount so that you recognize it as such once a month, even though you haven't paid
Right.
anything, right?
Right.
Okay, hold on. Not the sizzle. No, I'm not a CPA. I'll be working towards it in the next like 4 or 5 years. It's a long timeline. I'm sorry. I'm not that qualified to teach, but I'm doing this for the fun of it. Yes. Okay. Right. Let's move on. And last but not least, capital at 1st of May 2016. Is this
Okay.
an asset, equity, or liability?
I remember learning from secondary that capital is under equity.
Mm-hmm. Okay. But why?
No idea. I
Okay.
just remember capital is an equity. That's why.
I see. I see. The not the season. Not yet. I'm not studying for it yet, but soon. Maybe in a year or two's time, I'll start. But yeah, okay. So capital, the main gist of it is the amount that the owner put in, right?
Hmm.
So you think of it as is keeping track of how much the owner has put in, right? So just by
Right.
that, you can kind of guess that it's an equity. But the definite
Mm,
way is you think whether or not it's an asset or liability, right? Because equity,
okay.
as I always like to call it, is just not liability or
Right.
asset. But I just say not liability because it's on the same side as liability, right?
Right.
Right. So you think, is it an asset? Is it a liability? If not, they just throw it under equity and call it a day.
Okay.
Yeah. So
Okay. So
capital, is it
is
an
it something
asset?
like so is it something like savings? It's like
Mm,
it's not there for the company's daily use, but
mm,
the company can withdraw from it whenever it wants.
that is that is a different thing. So capital, uh, okay, let's go back to English, right? What do you understand from capital? The word, just the word capital. No nuance, no
Capital,
nothing. Just the word.
um, uh, I would say is the most prominent thing about something. Like the capital of something or a capital letter, very prominent.
Okay, then let's add a bit of business into it. What do you think when you say I need more capital to start my business?
Mm, I need more. I need more funds.
Is it an upfront investment?
No.
Okay. Right. So when an owner opens a company, right, he puts in a certain number of money or anything, right?
Right.
Mm, that will be recognized as capital. So if you look at the double entry, you debit, say for example, owner put in cash, right? Do you debit cash or do you debit capital?
You debit cash, you
Debit
credit
cash,
capital.
credit capital. Both means an increase, right? You increase in
Right.
cash, you increase in capital. Capital is just a way of recording how much was inserted into a company, basically. It's a description.
Okay. I think it's cause my brain is really fried, but it's very
It's
hard for
okay.
me to grasp this concept.
Okay. Um, I mean, you could always remember capital equity. That is not wrong.
Um, perhaps let's not dwell on this too much.
Okay, okay,
Maybe we'll come back to this on like on future questions as well. Because I know down the line like capital will definitely show up again.
okay. Sure.
Maybe we'll understand.
Okay, then let's
Like
focus on the question. Sure. Uh, let's look at assets, right? What is in assets again? You can just read it out.
uh, what was in assets?
Mm.
Office equipment,
Mm-hmm.
inventory, uh, prepaid expenses.
Prepaid expenses. Anything else? Your
No.
trade.
Oh, sorry. Yeah, trade
Okay.
receivables.
Yeah. So during your exam, you could actually write down like beside the accounts,
Right.
right? A, then L. This one is A, L, and E. Okay. So assets. What's the total?
Asset. Let me calculate off. 19,7 5 3 plus 4 6 0 plus 4 equals my calculator. Let me open up. Give me a moment. 19 19,740 plus 55 3 plus 4690 plus 400 equals 3383.
Okay. What about liability? What is under liability?
Trade payable,
Mm-hmm.
cash at bank,
Mm-hmm. Or
accrued
what
expenses,
is the word that we use to say a negative cash?
debt,
Over.
overdraft, bank
Mm-mm,
overdraft,
okay. Yeah. So you call it overdraft, okay. Then what's the last one?
accrued expenses.
Okay. Yeah. So and then what's the sum? Actually, I mean I calculated it already. uh
Like,
yeah, I think just use whatever figure that I got to speed things
okay.
up a little bit. Okay. Then we move on to equity, right? Equity, what have we established to be inside?
Let me see. Capital.
Okay, and
That's it.
is it? What did we establish at the very start? Where is profit or loss?
Oh, profit or loss is also under
Okay. So now you look at this huge equation, right? Do you know how to calculate? What is the profit or loss?
So we need equity, which means is liability. Sorry, it is assets minus liability.
Okay. Minus liability. Minus. Anything else in your minus?
Uh, minus other expenses.
Other expenses. Were there any other expenses that they told you about?
No, actually, hold on.
Hmm.
Is it not?
I
But this
mean,
A minus L.
it's just that one item in equity, right? That is not what you are looking for.
So minus of capital, is it?
Correct. So minus 5383 minus 10,000, right? And you just get 15,000.
Oh, you already done the calculations already.
Yep. And that is should be the answer. I'm not sure. I don't know. I don't have the answer with me, so
Okay. You are correct.
nice. Okay. All right. Okay. Then let's move on. You so far any questions before I move on?
Uh, Once again, I'm stuck at capital, but
Ah, okay.
uh, I know capital.
Maybe I'll create a video to explain it. Hopefully you have time to watch that.
Oh
Uh
man, you're rough.
Do you have time? Do you have time to watch it? If not, I mean, I'll still create it and you can watch it in your free time.
No, I'll probably watch it as revision.
Okay. All right. So, let's move on, right? The last two questions, like last two parts. You wanna the owner wants to transfer private motor vehicle value at 3,000 to the business, right? So how this will affect business profit?
Right.
Okay.
It will.
First of all, what is this private motor vehicle? Is
It
it
is
an
an
asset,
asset.
liability, or equity?
It is an equity
Is it an equity?
because because it describes the owner putting money into the company.
Does a car describe the owner putting in?
Oh no, asset.
Okay.
It's for the company's daily use.
Yep. So sometimes you just gotta English it. There's no better way, cause how do I say? Just common sense it. You think motor vehicle, you just put whatever item in that category into it and just English it. I think sometimes it'll make it clear.
And then overstate.
Mm.
Overstate.
It will overstate
It'll,
profit. Why?
because asset went up, but liability didn't.
Okay. So when your asset increased, okay, you're saying that your liability stays the same, right?
Right.
And then you have equity. Okay, wait, no, that's probably not the right symbol. And then you have equity, right? So equity would have increased. What do you think? What do you think the equity? What do you think was affected in terms of equity?
Uh,
Don't know. What happens
no
when owner put in stuff into the company?
capital.
Yeah, you increase your capital. Yeah.
Okay.
Mm.
So
So, uh, did business profit get affected?
no.
No. Okay. Right. So this is one answer, but I'm not sure if you have learned this topic yet. But I'm pretty sure what they're looking for is actually slightly higher level. So this is the first layer, right? So no change in oh my, what happened? Okay, no change in BP, business profit, right? But have you learned something called depreciation?
I have.
You have?
Yes, it
So what gets
is.
depreciated?
Normally motor vehicles.
Mm-hmm.
Most
And
common. Uh, and certain assets. Certain assets.
certain assets. Okay. Current or non-current usually?
Normally is non.
Okay, yeah. So you kind of got the gist of it, right? So motor vehicle, does it depreciate?
Yes.
And how do you recognize it? What do you
How do I
debit? What do you
reckon?
credit?
I debit.
Mm-hmm.
Okay, this one I don't.
Okay.
I actually don't.
So, okay, let's understand what is depreciation first, right? Why do you think we
Right.
have depreciation in the first place?
Uh, wear and tear
Mm-hmm.
and the market price fluctuates.
Market price. Okay. Uh, sure. Okay, so let's bring you through a story, right? When you first buy a car and you record it in the books, does that value change over time if you do nothing to it?
Yes.
Does it? If you do nothing to it, like if you do nothing to the books, you just write down what you bought it at. It doesn't change, right?
Honestly,
If you recorded it as such and you don't touch it, your car remain at the same value in the books, correct?
yeah, in the books.
Yes, in the books. Right. So as you use it, obviously the value decreases, especially more so in a country like Singapore. Uh, yeah. So you gotta recognize that, like quote unquote wear and tear, right?
Right.
So that's why we have something called depreciation. The other one that you're talking about for market value is our good old friend impairment.
Um,
Yeah, so it's a different one, but similar type of account. What type is
okay.
it? Is it an
It
asset,
is
liability, equity?
a liability.
Is it liability? Do you have to pay someone for it?
Oh, no. It is an asset. It's a depreciation asset.
Okay, so depreciation, accumulated depreciation, right?
Right.
That is what we
Sorry.
call a contra asset.
Accrued depreciation.
Accumulated. Yeah. So this is a contra asset, and yeah, you're correct. This is one part of it. What about the other part? How do you describe the motor vehicle accumulating depreciation? You have depreciation. What is this word? And since you know that the asset is being decreased here, what would be the correct entry here? Again, is depreciation an asset, liability, or equity?
Depreciation is an asset.
Accumulated depreciation is an asset, right? So what about normal depreciation?
Normal depreciation is an equity.
Equity is used to describe the
Money out.
process of depreciation, the happening of it, right? Mm. So depreciation. Okay, now that we know there's equity, is it capital? Is it revenue? Is it expense? Which one is it?
It is. I'm between revenue and expense
Mm-hmm.
uh, because it's dependent if you're planning to sell it or if it's just for normal use.
Okay, but if you plan to sell it, is there really depreciation? Do you depreciate
There's,
inventory?
so I would say it is an expense.
Yeah. So depreciation expense. Yes.
Okay.
So yeah, this is the double entry for depreciation, right? And expense, does it increase or decrease your profits?
Expense decreases profit.
Okay, so what will happen to their business profit?
So asset went up.
Mm-hmm.
Uh, Asset went up. Equity went. Expense went up. So equity went up.
Equity went up.
Did it not?
Let's bring you through, right? When you first bring in the car, yes. The first step we've established already, right? The first step is still valid, by the way. It's not wrong.
Right.
When at the end of the year, when you recognize the depreciation, your contra asset increase, meaning that your actual asset amount, like the total, decreases, right?
Right.
Then your depreciation actively subtracted from your profit, correct? So do you have more or less profit than if you didn't have the car?
I'll have more profit.
Is it? You subtracted from your profit. Will you have more or less of it?
Mm. Okay. Less.
Less. Right. So this makes sense, right? Because your asset decreased, your equity will also decrease to balance it out.
Right.
The fun part is how much was the increase and how much was the decrease, right? So we look at the
Right.
increase, right? 3,000 on both equity and asset, right? What about
Right.
the decrease? Do you think it's more or less than the increase?
More or less than it. Sorry, more or less than what?
Than the increase? Like how much was the
Uh,
decrease here?
the decrease is less than the increase.
Hmm. Okay, so let's say they have a 10-year depreciation, right? So and this first year, so it's minus 300. So yeah, this is basically it, right? This is the net net effect on the entire accounting equation. But remember what we're trying to find here. This just a like a fun fact kind of thing. Okay. But let's go back to the question, right? How would it affect business profit? So do you think it will increase or decrease?
Business profit,
Mm.
I would say it will remain unchanged.
Is it? You have
Because,
established that you have had an expense, right?
yeah,
So what happened to your profit?
huh. Okay, profit will also decrease then.
Profit will decrease, yes. There wasn't an increase in profit at the start because it's an increase in capital, not increase in your revenue. Or yeah,
Oh,
yeah.
okay.
So it'll be a decrease in, okay, in this case it'll be $300 decrease in profit. But overall,
Mhm.
your entire equity has increased by 2,700 net.
Okay,
Mm. So this is the more macro view. If you zoom out a
okay.
little bit, this is the full view. I'm not sure if the answer is looking for this, by the way. You should probably check.
Um,
Uh,
Says here there will be no effect of as transaction will only increase the owner's capital contribution
okay,
and
okay, right,
no current
okay. So, alright. So I think they didn't want you to think that deep. uh,
It's okay. I'm not a very deep thinker
yeah.
anyways.
So okay, business profit. It might mean operating profit. Then in that case, yeah, they'll be correct. So I'm not
Right.
exactly sure what business profit means in this scenario. It's a bit iffy.
Right.
Mm. But yeah, so if I don't know if they'll accept this answer, to be honest. Because if you factor in depreciation, the profit will actually decrease. Yeah,
Right.
yeah. So yeah, it depends. It depends on how they want to, mark. All right, so we'll leave it up to a coin toss.
Fair enough.
Yeah. Okay. So, question part D. Name two principles of professional ethics. So, I mean, this is for your answer to answer it. It's not for me.
This objectivity and integrity.
Okay. So, let me explain what I think both means. Right. Integrity, in layman terms, is doing the right thing even when no one is looking. Right.
Right.
In accounting,
So
is very important.
record down all transactions, no matter what.
And true to its nature, not just record it down. You can record it down in the wrong accounts and miss and just like bluff, right? So you gotta record it down and you gotta record it down the correct accounts.
Right.
So that is I think what they mean by integrity. Objectivity is related, right? So being objective means no bias, right?
Right.
You gotta remember that as an accountant, you don't just serve your own company, you serve the public. Remember the stakeholder circle that we drew? Literally everyone wants to know. Yeah. So yeah, that's what I think what these two means, right? Being objective literally means you need to pretend that you're an outsider, right?
Mm-hmm.
And you really gotta, stand up for the right thing. Yeah.
Auditing your.
I wouldn't say it's auditing. I think it's just upholding a certain moral. Which is very difficult to come by nowadays. So I hope you never get into a situation where you have like you need to compromise something. I really hope you don't ever have that situation. So
I hope
and
not to.
yeah, that's literally all I think is what they mean by these two.
Okay.
Right. Okay, so we've come to the end of lesson. You have any questions? Cesar, I'll answer your question after this.
I'm good. I'm good. I have
You're
to
good?
digest after the.
Okay, okay. Yeah, I'll upload this lesson
Yeah.
soon, so you can refer to it, right? Okay, if not, thank you so much for being such a good student. See you
Thank you so
around
much.
on Friday.
Thank you,
Yeah,
Sensei.
yeah.
Now I have to go. Now I have to go look at my medic notes.
Yes, good luck. See ya. Bye bye. Okay, and I'll stop the recording here.